All right, Merry Christmas, Happy Holidays, everyone. Sorry for the late Outlook posting. I lost track of time yesterday. Um, but let's go ahead and get into it. So the markets actually did close early. I think they closed around like noon-ish for the pairs that I was trading, or around noonish or two, one of those. But anyway, let's get into it. So Euro USD, looking at it from the macro perspective, once again, we are still continuing the push higher. Still inside the price leg, still inside the secondary impulse. We're maintaining the momentum here. The pullbacks have been relatively short, quick to get entries, which is what every pullback is an opportunity to get an entry used for when you're inside of a price leg looking for the buys as you go higher. But like I explained earlier, the daily isn't where I want to use my entry models or framing my areas of interest. It's defining the forest. And then I use the 4 hour now to define the trees and opportunities to catch trades so I can capture more opportunities and, more profit, more data. All right, so Euro USD, we're still steady moving higher. This was the optimal move here that I just have marked up, annotated, seeing what I missed out on initially, which was based off of this daily area of interest, refined actually down to this 4 hour area of interest, and then we got the immediate reaction. We had the push away, and then as we can see, once we pulled back, this was the optimal entry. And usually these are the types of trades that I will capture, and if not on the 4 hour time frame, somewhere immediately close to it to capture really high RR trades. All right, so that's Euro USD. Moving on to GBP USD, we are steady, moving higher. We solidified the pullback already, so now we're just waiting for the area of interest. I believe I explained it in detail what I was looking for. A little too much detail, but yeah, we're moving higher into the pullback. We're looking for a response from a 4 hour area of interest, which was here. This actually, I believe it was, this sponsor candle here, which is a part, the sponsor candle. It mitigated this previous inefficient pricing or this previous price gap, and then this is what led, or this is the origin of this entire bearish impulse run here. So now what I'm looking for is a return to that origin to mitigate whatever's left and then continue on the current macro bearish run, which is what the current state is. We transitioned from a bullish run to a bullish range, and because we broke the low of the bullish range rather than the high, which was what we were looking for initially, assuming continuation of the current state, we broke that, we transitioned states, so now I'm looking for pullback into this area of interest to fill in the last inefficient pricing inside of this price leg. Now that everything below it is actually mitigated, there's only one logical place left for price to go. And once we get a response from that, it's either we break out of this and say F the trend, F the bearish trend, or we respond and we go lower, which will be good for the dollar if you're just looking at it from, the fundamental standpoint. If GBP USD lowers in value, that means the dollar is doing better, or the GBP is just doing worse and the dollar isn't, doing better. But yeah, moving on to the NASDAQ 100. Okay, so like I said before in the previous outlook, I went down and tried to see like, hey, what was going on in this area? Why did price respond from here? We explained that we had a liquidity draw, which was essentially for the macro state, which is essentially just a repositioning of our structural point inside of this macro bullish run. And now we were trying to figure out, hey, why did price, pull back here and not, go any lower? And that was when I went down to the 4 hour time frame and started assessing the price action more deeply, and not seeing this as a price gap, but more so seeing this portion as a price gap and then this candle mitigating 100% of it, and that ended up being my area of interest. So we had an action of mitigation to mitigate this price gap specifically, and then price mitigated essentially 50%. I'm not going to like go on to different candles, but the logic here is that this entire candle that I have annotated with my green box here is my area of interest, and 50% of the area of interest is here. Um, and then, price gave the response that it had here. I actually caught a couple opportunities up here late. After the sweep of this low, and I actually caught a counter trend going towards the low, so I caught going this way, and then I caught going this way to take out that high. I took profit at the high just to capture some stuff because I was a little skeptical of what we're going to do up here. The higher we go, the more risky it is to take moves, but there's still opportunity because we are supported by the overall bullish trend. But speaking a little bit on this candle right here, is it's I wouldn't consider it we technically can consider it a sponsor candle, but I'm not using it for entry because the wick to body ratio is so low, or it's so much favoring the wick. So instead of just looking at it from the perspective of a sponsor candle and having all the rules set, I use it as an area of interest to frame up potential trades. That way I don't have to, say that the entry would be here. That would be the sponsor candle play. And then usually my stop loss is at the bottom of the candle, so I would have been tapped out anyway. And then conservative would have been that low, but that would have been way too large of a stop. So we just use the entire candle in this particular case, in this one particular case, to say that 50% of the area of interest is here, and then you find opportunities as you see fit. All right, US 30. So I explained earlier that we were looking for a price to move higher, which it did. We had the draw in liquidity, so the shift in structural point here. Yep, we had the shift in structural point there, and then I explained all the opportunities that we were going to move higher, looking for taking out liquidity points higher and higher. We had this initial, what was this? The Tuesday? Yeah, so actually Tuesday, this was the move. This was the move where we got the pullback into this area of interest here on the 4 hour, right? And that mitigated 50% perfectly. I actually ended up catching an entry up here because I was just late to looking at this. And then we got another entry yesterday, which I did capture, was the mitigation of this 4 hour. And I hope you guys are seeing every opportunity, every pullback in a bullish trend or bearish trend is just an opportunity to catch a trade. And they're all going right to 50% or 100% fills of the price gap. They're not going randomly to places. Like every single time it's mitigation of 50 or mitigation of 100 with a little bit of residuals, but more likely than not, all you have to do is refine this into, if you're using my system, into the specific candle to capture that really good RR trade. And then there was definitely opportunities down here, so on and so forth. Obviously, this most likely was definitely an opportunity. Like I said, 50%, yet again, perfect. And then this right here was after this mitigation, just looking at the logic of the candles, this candle here mitigated whatever was the origin of the move in this wick. And then that led to the push here, that led to the creation of this, that pullback there, led to the creation of this, that pullback there, and now we are running this high. So what we're seeing right now in US 30 is potentially continuation towards the all-time high, or this really, what it could be is a liquidity draw here. Wait, actually, because I don't know yet. It could be a liquidity draw, and it also could actually be a liquidity draw plus 100% mitigation of this price gap. So we're moving, slightly higher. We're pushing a little bit higher than what was anticipated. I was expecting, mitigation of this 4 hour sponsored candle, but really I need to stop calling them sponsored candles if I'm using them as areas of interest on the higher time frames. Because that's not really what I'm looking for. So I use this area of interest and I refined it down to a specific candle, and that candle did give a valid response, but it wasn't the candle because price decided to draw higher. And so now I'm seeing this as a potential draw on liquidity and mitigation of the complete price gap that was generated from here to here. And so now what I would be looking for is counter trend price to draw liquidity from this high and then move lower. And pro trend is just a continuation to take out this high and then see what happens from there. I just realized I was on the 4 hour this whole time. All right, so XAU USD. Gold, there's not really much to say. We are just steady climbing higher. If you really, if to be honest, if I wanted to hold the trades that I had, I probably should have. But I like to take profit at key or at specific points because I know once it reaches there, it's actually a take profit level. The more I hold this, the more room or the more room the more I'm open to risk against counter movement against the move that I am. So even though we're in this run phase, we're really bullish run phase, at any point in time price could just absolutely drop, and especially if I'm catching opportunities the higher I go, there's more opportunity for price to just, wick me out. So what I'm going to do here is actually sit on the sidelines until more structure forms. So something like literally generation of a price leg of some sort. So I want to see, some highs and lows get created, then a break of structure of those highs and lows. And then once that happens, then I'll start looking for opportunities on gold. But like I said, going into the new year, I will no longer be on the CFDs. I will be trading futures. So get used to me looking at the micro charts as of right now for entries, and then the futures charts as well. The micro futures and futures charts for taking trade setups and looking at trades. The pricing will be a little bit different, but it is definitely a lot more consistent. It's mark to market. The spread is basically non-existent. Um, it's just a better overall environment, in my opinion, for trading. The capital requirement is definitely higher if you're looking to trade live, and yeah, that's pretty much it. Happy holidays, Merry Christmas, Kwanzaa, all those. Peace.